as we now like to open the panel discussion. We'd also like to re-invite on stage. Let's call upon the moderator of this conversation, Ashish Wadhwani, co-founder and managing partner, Ivy Cap Ventures. Let's give him a warm round of applause as we re-welcome him on the stage, this time being the moderator of this conversation. Also, allow me an opportunity to invite all our panelists on stage, starting with His Excellency Hadi Badri, CEO of Dubai Economic Development Corporation, a subsidiary of Dubai Department of Economy and Tourism. A notable figure associated with the Dubai Economic Development Corporation, a key government body responsible for driving Dubai's economic growth, supporting businesses and overseeing various regulatory and licensing activities. We did hear from His Excellency Hadi Badri in the inaugural session as well. Let's once again warmly welcome him with a big round of applause. We also have on stage Mr. Mahesh Patil, Chief Investment Officer, Aditya Birla Sun Life, AMCI. Mahesh Patil, of course, being the CIO at Aditya Birla Sun Life Asset Management Company, one of India's leading asset management firms. In his role as a CIO, Mahesh is responsible for overseeing the firm's investment strategies, portfolio management, and the overall direction of its fund management activities. His leadership truly has been crucial in shaping the investment approach. So thank you so much, Mr. Patil, for joining us on the same. We'd also like to introduce Ranu Vora, co-founder and executive vice chairman of Avendus Capital, a leading investment banking, asset management, and wealth management firm in India. Under Vora's leadership, Avendus Capital has built a strong reputation in not just India, but globally for its expertise in providing advisory services, capital raising, and of course, wealth management solutions to high-growth companies, entrepreneurs, and investors. With that, of course, I'd not like to leave any more opportunity of requesting Mr. Wadhwani, since he's going to be moderating this conversation. So now the live baton is over to Mr. Wadhwani to curate it forward. Thank you.
Thank you very much, and good afternoon to everyone. We sit between you and lunch, and I hope we can make it worthwhile. We have a very distinguished panel here, and as I mentioned in my kickoff, we want to explore investing in technology, not only the various sectors, not only from the point of view of an investor versus somebody who is using technology, but also from the point of view of global, in terms of a Dubai perspective and an India perspective. So let me start by asking His Excellency Hadi Badri to share with us what is Dubai's strategy in terms of attracting investment. And I believe you have something called a D33 program. Could you elaborate on what the genesis of that program is, what the bigger vision is, and what you are trying to accomplish?
Thank you. Again, thanks for having Dubai be part of this amazing festival of IIT, everything IIT. We have a 10-year plan in Dubai called D33. It's an economic agenda that aspires to position Dubai as a top 3 global city and double the size of our GDP between now and 2033. And when we say global city, we really mean global. And so there are lots of cities in the world that are amazing cities, but by definition, domestic. They're not really global cities. We think that Dubai deserves its right to really be one of those global cities because of where it's positioned geographically, because of its existing connectivity, because we are a melting pot of different nationalities living in the city. We have several pillars of focus to be able to deliver our doubling of GDP plan. We are focused on logistics, manufacturing, financial services, and tourism as key sectors that we want to drive. But perhaps most importantly and most relevant for this forum is our focus on productivity and talent. In productivity, you asked about the genesis of the 10-year plan. Historically, Dubai has grown about 3% per year. It's in our aspiration to be number one in everything that we do. 3% is not going to cut it for us to be number one in growth. But the formula for that growth over the past decades has been the same. It's been about attracting talent to build the infrastructure in Dubai. And so we have been able to attract population to Dubai, but we haven't really been more productive year on year. And so our focus going forward is really about changing the formula. How can we generate 2/3 of the growth over the next 10 years from productivity enhancement? And we will do that through technology, digitizing sectors, attracting scale-ups to be able to come and really create meaningful value in the economy. And then on the talent side, that's also where we see a productivity opportunity, because we want to attract the best brains to Dubai. We have progressive visa policies like the Golden Visa that really allows for talent, high net worth individuals to come and make meaningful contributions to the economy. And then, the intersection between talent and productivity is to attract the world's best institutions, educators, universities to Dubai. And that's where we're really excited about the impact that IIT will have by having a presence in the UAE, both in Dubai and in Abu Dhabi. And we think that can really help propel our economy going forward.
Well, that's great. So doubling the economy, top 3 city, increasing productivity through induction of talent and new technologies in the country. Really fantastic and grand vision. I'll come back to you with some of the sectors. But coming to Ranu and Mahesh, you both started your careers when technology was in the earlier form, more in terms of perhaps IT services. And there was a limited amount of risk capital, very, very tiny amount of risk capital. And I think take us through the journey of what has changed and how do you see the landscape today in India, which can potentially shape what the next 10 years look like?
Yeah, so I think, I've seen this, India, as you know, on the technology side, I think we are the largest exporter of technology talent to the world. And the success of the IT industry is well known, right? And that's what the formative years, where we saw where India was doing the back office work kind of outsourcing. But I think in the last 5-6 years, I think we are in a world where digital, so it's not purely IT services, application and development, but I think digital is the key word, and innovation over there, I think that is driving the new change over there, where the outcomes are non-linear, right? Because in the earlier IT phase where we were looking at, it was more about man hours, right, which were getting translated into revenues. So it was a kind of a linear growth, though growing at a pretty fast pace. But I think the new age technology companies, which are coming up, and the digital companies, which are essentially disruptors, right? So they are disrupting the current landscape, be it in the financial services, be it into the manufacturing side, be it in the healthcare sector, and they are trying to create value in a non-linear fashion, and that is very exciting, right? Where India, a lot of the Indian startup ecosystem, if you look at the way it has evolved in the last 5 years, I think it's the third largest in the world right now. And we've seen many new companies, unicorns, which have come up in the last 3 years, especially post-COVID. And I think that is an area which is not only attracting a lot of investments. So a lot of FDI, what we saw in the last 3 years, has been in the in the digital space, in the startup ecosystem, and that is creating, I think, new opportunities, new growth, And I think that also poses a lot of challenge in terms of the talent pool, okay, what we have in the space. But I think we're finding that now initially I think this space was more in the private space, but now in the public markets also we've seen now a lot of these new age technology companies are able to get listed. And once you come from the private space to the public markets, okay, which is where I am representing, I think then you get a lot of visibility. And we've seen the kind of wealth creation, okay, which has happened in that sector. And I think for India, I think the good thing is that there is a large market which is there. So a lot of these applications, a lot of success stories, what we have seen in the initial phase in the fintech area, in the platform companies, okay, which we have seen, say in the delivery space, that has shown the appetite, okay, which is there for investors, okay, to participate in this whole ecosystem. So I see that I think India is, I think the opportunity is there. I think the landscape for investing into the technology is transforming. And I think there are a lot of technology which are evolving now, right? I think India is also taking a lead into the sustainable energy, the green energy technology space, where I think you will see a lot of work happening and where technology will play a lot of space. Even in defense, okay, defense is another area where I see a lot of work which is being done. It's been opened up for the private sector, and I see a lot of new companies which are coming in and which will open up opportunities for investment in the tech sector.
Ranu?
Thank you, Ashish, and lovely to be here with a lot of our fellow IITians. I went to IIT Delhi, batch of '93, and very proud of what contributions IITs have made to the country. I think on your question, there are a few very big changes which have happened over the last 2 decades that I have kind of seen. In some manner, the landscape for technology itself has dramatically moved. The needle has moved. I think for one, we were a small pond, 20 years back. The right way to do it, see it as the market size, everything. There was promise, but we were a pond. Today we are not a pond. Today we are part of a very big ocean, right? And I think in some manner, that scale itself, the huge amount of scaling which has happened across multiple industries has led to technology's role coming right in the fore. Because if you see, if there is one way in which businesses can be scaled up in a meaningful time frame, that's through technology. So whether it is by way of just the number of phones which were connected to data, and Jio kind of brought in a revolution of how many smartphones were available and data kind of enabled phones were available, to different kinds of businesses springing up to cater to clients in a new way, where we skipped multiple generations of infrastructure building with new business models, to the public infrastructure stacks on the back of which some amazing developments have happened in the financial technologies area and financial services area. I think the scope with which technology has changed both quality of life in India, as well as in help in scaling businesses has been tremendous. I think one key parameter to look at is where would you put incremental capital? And I was sitting with the chairperson of one of the largest conglomerates in India, and I was asking the same question. And the answer was that incremental capital is going towards digital. Right? You could be a business in chemicals, you could be a business doing agriculture, but you could be thinking of incremental capital going towards the use of technology in that or use of digital in that industry. To me, that's a very big indication that we are headed over the next 10 years in the right direction, where capital is flowing to parts and pieces which can help scale those businesses in a non-linear fashion and hence create value. When capital is going, obviously the next question is, how is that capital generating returns? And I think if anything, one way to look at it is, what is today the market value of the privately held companies as compared to public companies? And that ratio has changed dramatically in the last 2 decades, to the extent that today probably I would say at least 700 to 800 billion of value is lying in private companies, many of who are in the late stage, as compared to a total kind of market cap of the listed markets, which stands at what, 3.5, 4 trillion, 5 trillion? About 5 trillion. So if you look at the ratio of the value held in private companies to public companies, there's been a dramatic change. And mind you, a lot of this value is sitting in companies which had technology as a base, or technology as a key reason for them to exist and do well. And all said and done, investors go purely and purely by data and patterns. If there is value creation which is happening in that part of the private universe, and those companies will go public in the next few decades, investors are seeing money being created, money being returned, multiple value being created, and that's why the angel movement in India has gone dramatically higher, where millions of people today are angel investors. So there is a very big mass movement today, which is spurring technology. One last part which I wanted to talk about was, how has that influenced entrepreneurs? And I think entrepreneurs today are aspirational, they are fearless, and they do not consider India as a, earlier in the 80s and 90s, if you were an entrepreneur from India, you would probably consider yourself as limited by what your country could offer. Today, you are on a positive step, forward step, where you are saying it's an advantage for you. You have a lab available today where you can create a product which can be embraced by millions of people, and that product, that cost structure could be taken to so many countries in the right way. So I would say the real evolution is happening where entrepreneurs are going on that path and creating India-first models which are globally competitive and have an ability to get you global market share. So that's the big change.
No, that's very well put, Ranu. If you go back even 50 years, even in public markets, every decade throws up almost new bottom-up and companies into the public market, coming from different sectors, all the way from perhaps auto components in 80s, then IT services, real estate. And I think this decade very clearly belongs to technology. And you've articulated very well that technology, innovation, and entrepreneurship is changing the mix of private to public investment, as also attracting a lot more investment across the board. You mentioned something about incremental capital, and I'm going to go to Shekhar on that. From a corporate technology and a CTO hat, what technologies do you see as being really disrupting, let's say, the fintech space, and literally changing what is a bank and what the definition of a bank is? What would be your most exciting picks?
I think I'll say the way the India has transformed, the way the customer has transformed in last 10 years, I think has been much, much more than what happened probably even 50 years back. And a lot of it is driven by the infrastructure which is put in place, and the technology, I think, which is enabled to, I think, ride on that infrastructure. What do I mean by that? I think just see 10 years back, I think 3 initiatives of JAM, which is not the traffic jam of Mumbai, but it is the Jandhan, which is J, I think the Aadhaar, and the M of mobile, I think ensured that that lays the infrastructure which is required, followed by I think the stack, I think the financial stack, I think it gets created to ensure that you are able to reach the last mile. The same becomes important for every financial services player when they want to, I think, work on any of the products or any of the services which has to reach. And that has the entire impact on, I think, what we want to build and what we want to distribute. If you want to be a wealth manager to every, I think, Indian, if you want to be a money manager for every affluent Indian, if you want to be a banker to every, I think, every common man, I think, which is there on the ground, you want to be, I think, into the length and the breadth of the country, covering, I think, all the districts. It is important, and you want to be valuable and delivering value at scale at a minimum cost. I guess, I think tech becomes important. For us, I think first was infra to be put in place, then the security, but now you actually move into the high end of data. I think the intelligence, the computing power, the personalization which you can give it to every customer. Individual getting transformed to a machine. Common things can come in a normal manner, and advanced things can actually be delivered with a personalized manner. Don't ever lose the human touch, I call the HCI. And leading into all these things, we generally feel that the quantum computing will be an important part along with the entire data models on AI, ML, which will be determined, but highly personalized, requiring significant amount of I think computing power and I think data intelligence, followed by I think the entire framework of, I'm still I think a big believer of I think hyperledgers, which is what is going to transform the entire world. Yes, I have been on it for 10 years and it has not progressed the way I would have ideally wanted, but I still remain what the technology offers as a real solution. If it is built at a cost-effective manner, I think it can actually transform, and that will become the product for all the financial services and the world at large.
So I'm going to pin you down on that and ask you something very pointed. I know Mahesh, you had something to say. I'll come back to you. If you had $100 to put money in 3 technology areas, right? I'm not getting down to specific. Where would that be?
I think the first part will definitely go in the current, I think where I stand, it will go into data and highly personalized part which I can make. I would ideally want a personalized solution, advice, transaction to, I think, every individual, whether it is a corporate or a consumer part, I think to be put in. So out of 150 goes in over there to ensure the entire piece. I'll build the future with the 25, I think, which is going to be ensuring that I think when you walk in 2030 and 2035s, I think that part is taken care of, and some part in human-computer interaction, which I feel is a bit far away, but I think will be required when all of us like robots, all of us like I think machines, but we will require a human as well.
Got it, thanks. Mahesh, you wanted to add to that?
No, I was just trying, I think the biggest, the traditional companies, okay, their biggest advantage in the financial services world has been the ownership of customers, right? Banks and other institutions, okay, which own the customers, and that was the biggest asset, and they could offer them solutions. Now I think that is getting democratized in a way, right? While that is an advantage, but no longer. I think with technology, with platform like aggregator platform, which you have for the financial services, where with consent of the customer, okay, you can access to all the financial data of the customer, be it with any other bank or where it is. So I think it's more now driven how you use that data, how you analyze that, and able to really segment the customer and offer them solutions, okay, which can meet their risk appetite and accordingly price your products, right? I think that is where the advantage is moving in. And also being able to reach, because India, while we've achieved a lot of penetration, we've seen that, but still financial penetration, if you look at, is still much lower, right? I mean, the number of people who are having mobile or phones is much larger than people, okay, who have an access to, say, for example, a loan account. I think with availability of data now, okay, and more avenues through the digital platforms to aggregate that data, what it is doing is that you're able to now get a lot of people who normally don't have this formal bank accounts or your formal information, but a lot of informal information is now captured by the digital mechanism to be able to penetrate and to reach a larger section of the population. So I think that's enabling it to increase the overall addressable market for financial products. But more, I think important is how you're able to, at the front end, able to offer solutions which can be much more segmented, targeted for a particular risk profile. And that's where I think the balance is moving in the financial services sector.
Great. No, thanks for that perspective on financial services. But I'm going to again pin you down, Mahesh, on a very specific topic. Finally, everyone wants to know how we can replicate the returns that you do, right? So, you obviously invest in public markets, and I'm sure maybe on the private side too. But when we look at technology, we have, startups coming in and then growing bigger in the private space. And now, of course, a lot of larger companies catching up. And it's kind of debatable whether AI will be the domain of larger incumbents who have the data, who have the distribution, and who have the resources. So how do you see the winners between smaller, nimble innovators versus larger corporates who are incumbents, who have data, distribution, and customers?
Yeah, so I think the investing landscape is becoming much more complex and at the same time becoming very exciting, right? It's no longer the traditional large companies, okay, which you would look at and they were getting bigger, right, and stronger. But there are these new companies which are coming in, which are also possibly trying to disrupt the existing incumbents. And that's where big opportunity can come in for investors over there. And we've seen that, right, happen for example, in the financial services sector, we've seen that the fintechs coming up and trying to disrupt the traditional financial services or the banks. We are also seeing technology disruption. It's also happening in multiple areas, right? Whether it is in the, for example, the electric vehicle, right? On the EV side, where the newer companies are coming in and trying to disrupt the incumbents. So I think in a way, from a investing landscape, the traditional companies also are companies which are investing on technology and trying to build that edge. I think that will define in terms of who are the winners, okay, going forward. Obviously, I would believe that the incumbents or the traditional companies will always have an advantage because they have access to the customers. They have a large customer base. How they leverage and to really offer them innovative products to be able to not only to able to retain them, but also to increase their whole value proposition to them. And that's where I think the ability for the traditional companies to acquire, right? So the innovation happens in the startup ecosystem, right? Because that's a totally different mindset. I think there will be a lot of acquisitions you will see from the traditional companies acquiring some of these startups and trying to build that whole ecosystem, because if they have to be competitive with the disruptors, okay, they need to keep in pace over there. So, I mean, I would see that when we look at some of the technology companies and investing, clearly I think from a public markets, it has to be having a road to profitability, because road to profitability is very important. And so when companies have established unit economics in place, because that's the most important thing, okay, which we would look at. Once the unit economics are in place, then I think there is a road to profitability, and that's where the public markets become much more relevant. Until then, it is the domain of the private space. And I think there are a lot of businesses, okay, which are pursuing that path of unit economics. And then I think it's a question about scale and size before they reach to profitability. And I think that is that is an area which, okay, we look at while we were investing. Like when we first started investing in the public market in the new age technology companies which were listed, I mean, there were no profits, right? People were asking us, okay, how do you value these companies, right? There was no way of looking into it. So then we started looking at unit economics and then trying to look at, say, 10 years down the line, or 7 years down the line, or what could be the profitability, and then start to value them. So, and we've seen after the initial hiccups what we saw, but we've seen some of these companies have now reached a very significant scale and size, and some of them are now in the top 100 in terms of market cap. So I think you will see a balance of both. We've seen in the US, okay, which is much more advanced, the digital or the technology companies are driving the market cap over there, right? So if you look at the US, the whatever market cap which has been created in the last 4 years, it's primarily by the technology names. The traditional companies haven't really grown. In India, I think there is a space for both the new age technology companies as well as the traditional companies who are adopting technology to continue to grow, because India is still a growing market. So the traditional companies will also grow, and if they are able to really co-work with some of these technology companies at the front end, I think there is enough value creation, okay, which they can do going forward.
That's great. I think very well painted picture. As a VC, I am particularly excited with the fact that you're saying the public markets have a lot more appetite for tech companies, as well as the point you made around M&As, a lot more M&As. But I hope they're going to pay the premiums that, founders expect when going from private to public. But that's a different topic. We'll come back to that. Switching focus back to Dubai, I think, which has become a very important hub in the region as well as in the mind space of many founders in India. How do you see the VC ecosystem in Dubai shape up? What are the pools of capital? And how can Indian founders and entrepreneurs, what kind of founders can benefit from the vision that you have as well as the capital that you offer?
Maybe just to give some context, as the United Arab Emirates, UAE, we're quite small in terms of population. We're 10 million people. But ours is a market that is really gaining significance in a big way. If you look at our GDP in the UAE is larger than Singapore. If you look at our capital markets are larger than Brazil. And if you look at the VC ecosystem, while we're only 2% of population in the Middle East, North Africa, we are 40% of the venture capital market in the Middle East, North Africa. And so, there's obviously very good talent that is attracting VC dollars and very good business models that's attracting VC dollars. So we have about $1 billion of venture capital that is deployed into Dubai every year. Half of that is coming from local investors, half from international investors, which we think is a testament to the quality of the entrepreneurs and the business models that they have. We have 8 privately held unicorns, and we have an aspiration by 2033 to have 30 additional unicorns in Dubai. For Indian VCs, I think a couple of opportunities. Firstly, to bring their portfolio companies that are really ripe for internationalization to do so from Dubai. Dubai can be a very good testing ground for them to enter other global markets because, again, by definition, we're a global city. We were just talking earlier about a B2C service business that has done very well in Dubai from India, and he's been serving different segments of the population, different nationalities. So in India, he's learned how to serve the Indian community. In Dubai, he's learned how to serve every other nationality community. And that's really primed him to be able to now go to other markets and serve those customers really well in that specific way. So Dubai's been a very good testing ground for him. The opportunity that I say for founders is that, Dubai is really familiar for Indian founders. What you see is what you get, first of all. We're only a 3 or 4 hour flight away, so arguably it would be easier for Indian founders to come enter the market than to set up a new business, halfway across the world. For us, ease of doing business is actually ease of doing anything, and we're, as a government, really, really focused on that day in, day out. We have Indians, and including IIT alum, as decision makers in some of the largest corporates in Dubai. And so one could argue it's actually that much easier for Indian startups that are looking for partnerships with some of the large corporates to really gain scale, to find and create chemistry with those decision makers in Dubai. Dubai also offers very good unit economics, which was just the key point that was mentioned. And, India is a significant source market for FDI into Dubai. So I would say there are lots of boxes that can be ticked for Indian founders, Indian VCs to look at the market quite seriously. And we have a number of programs as a government in Dubai where we can partner and really encourage Indian founders and VCs to come and set up a meaningful presence and take advantage of the opportunities that are on the ground.
That's a very interesting perspective, because many a times when we speak to founders, people are looking at the US, particularly tech founders and others, US market and Southeast Asia and so on. But I think what you are pointing out very interestingly is that Dubai is literally a gateway to other markets. It's probably a commercial lab to test with other, for various nationalities and sub-markets. And also you can get better unit economics in many of the businesses. So I think many founders who are listening to it would be worth exploring these angles when they look at Dubai. So let me come back now to the topic that interests everyone, as to very successful gentlemen on this panel. They've all made a lot of money investing. And I want to ask you, and Ranu, let's start with you, because you seem to have a golden touch of, looking at industries, spotting winners and scaling them up. Where are you putting your money, or where would you advise people to put their money in tech right now?
I think though we are investing in tech, ultimately, as you know, a lot of this is not 0 to 1 technology, it's incremental technology. I mean, we are still, as a country, we still need to do a lot more work in building disruptive technologies. So one, I think, let me take the light away from the fact that these are pure tech companies. Ultimately, there is a business which they're doing, which could be consumer, which could be services, which could be finance, and technology is a strong enabler or an advantage, but might not be the only ingredient. So when we are looking at companies, business models, I think we are constantly looking at large market spaces. We are looking at areas where, I would say the entrepreneurs have a very differentiated and a clear right to win, right? I mean, in those areas. I mean, let me throw in an example of one of the companies which we had, participated in, Lenskart. I mean, I think very clearly right from the beginning, it's an entrepreneur who understood what execution in India means, right? Because a lot of entrepreneurs, despite being very high quality technocrats, do not know what execution in India can entail. And I would say it's always kind of, I always marvel at how people have been able to, or entrepreneurs have been able to circumvent or overcome some of the traditional issues which execution in India can entail. So I would say Lenskart, for instance, defined a category, they started executing it, they started kind of looking at different business models and went in and created that. Now, is that a technology play? Is that an execution play? Is it an entrepreneur quality which mattered? I think it's a combination. It's a combination, but I cannot call it pure technology by itself. So when we look at businesses, the other part which I do want to bring out here, which I think is going to be a little controversial, but let me put it out still, is I think we are in a world where a lot of markets and market spaces are becoming winner takes all. The market share, the profit share, the market value for a lot of these companies is, kind of, they just seem to accumulate more and more mass as they grow. So startups, smaller companies will either have to grow at a disproportionately large scale and relevance, or they have to be ready to be consumed by these companies. Going public is not the end game. Going public is a roadmap for further growth. And in my mind, a lot of companies actually might go in the route where the larger companies will just gobble them up. Whatever's happening in the US with the Mag 7 or Big 7, and now, oligarchs as the outgoing President Biden has defined, I think you have to see that a lot of businesses in India also, you should be ready in the next 10 years, will become masses and accumulated masses of power and market value and profit shares, and the smaller companies will have to redefine themselves to be relevant to a new world. So I think that's how. So you have to decide which part of the scale you are in. You could be a public market investor, and you could do very well being with the larger companies. They will continue to grow, they'll continue to garner more market share. Or you have to then make a play where you say, okay, I'll be in smaller companies, but then I have to be ready that it'll be the end of the road for me in the next 4 to 5 years, and I have to be, just as a public market investor looks at flipping their position over a period of time, a VC has to be a lot more, or a private equity fund has to be a lot more active in flipping their positions by way of an M&A deal. Capital markets is not, I would say, the solution there necessarily. So with that trend, I think that's where we are looking at, the key trends as we look at investing. And then the last part would obviously be investing behind companies where technology can be a big enabler. Traditional businesses where technology can just change the metrics. So that would be the third part.
Great. No, so basically tech-enabled existing business with a large market, which has an ingredient of technology which creates a differentiator, as well as tech enablers. But there's one point you spoke about at the beginning of what you said, which was around we are creating incremental technology, right? Let me ask you a related question on disruptive and emerging technology. Something like space, something like robotics or biotech. There's a lot of activity now in the last, say, 5 years around what we call internally as emerging tech. I know you didn't sort of cover on that, but would any part of your $100 go towards that, or it's something that you don't want to touch?
I think there's a space, Ashish, to be honest. I mean, today, if I were to go with a very disruptive technology to venture capital firms in India, I'd draw a blank, okay? There'll be very, very, very few, and let's face it, let's be honest to ourselves, how many venture capitalists would back purely disruptive technologies in India? Very few. So I think the capital is not chasing those kind of companies. That's a problem we have, unless, and the government has to step in certain of those areas. For instance, deep tech as an area, the government has to step in and kind of help that area kind of come up. There exists a space for venture capitalists who understand that, but there are very few pockets globally which understand disruptive technology. Silicon Valley is Silicon Valley because it understands what disruptive technology can mean and how to create disruptive technology. And they have consistently over decades produced disruptive technology. I think if we have to get in that direction, we have to fundamentally change the way we look at capital pools, and we have to allocate capital, and hopefully in the next 5 to 10 years, you will have some venture capitalists who could be hybrid Silicon Valley, India-based firms or otherwise, who could actually take these disruptive technologies and believe that these can be scaled out of India.
Absolutely. I think we do some activity there, and I think we have a long way to go. And the good point you mentioned also is on many of these sectors require public intervention. And there's a whole stream of economic thought and literature around public-private partnerships to create these disruptive technologies. I think, Shekhar, any view on disruptive technologies? Any of your $100 going into that space?
I think you are a public institution. I think you need to ensure that you take care of customers' money well. You are governed very, very rightly in the form of public money, highest leveraged, make value for your customer, I think create value for your shareholder. You will find that many of these funds, and I think people who have been able to probably make multipliers, are able to probably back that more. We come in the form of debt financing to a couple of these people rather than equity financing, and we have seen the new age companies being supported significantly on the debt side by institutions, including by us. One side we manage their money, but second side we ensure that you are able to fund the institutions and move forward. Just on the one of the parts that you still have scale available in a few countries, including India and China, and you will keep seeing innovation to ensure that that scale needs to be addressed. There are business models which are available, and there will be tech either by the big guys or so-called as new entrepreneurs who will actually create that niche and are able to move forward.
So more cautious view on emerging tech, but Mahesh, you want to add anything?
No, I think you have to look at India is a unique country in that sense, right? It's the most diverse. When I say diverse in terms of, if you look at our states also, right? The per capita income will vary from $600 to around $6,000, right? If you look at some of the states. So that you take into consideration. There are diverse languages which have been spoken. We have a young population. So I think any company which is looking at, trying to tap at that diversity using technology, to solve that problem and able to reach out, I think can be a winner, right? Because that's the only way you can manage that kind of a diversity and offer services, at a price and this thing which can be able to cater to a state which has got a per capita of $6,000 and also $600. So I think that's one area where technology can solve that problem. So I'm just making a very general statement, right? It can be in any area. We've seen that happen, say, in the financial services space. But I think apart from that, I would say that one theme which I see, right, which is probably still early stages but will gain dominance is sustainable and green, right? So India is also committed, right, towards being carbon neutral, but for a longer period of time. But I think in that space, green or sustainable or energy transition, I think is an area where I think one can see a lot of investments happening over there. The good thing is that India also is kind of trying to lead in that space, whether we are seeing in terms of green hydrogen. And while it is still in the early stage, but I think that's an area where one can see some value creation. I think we are looking at that space, exploring that, because that's where I think early more advantage can be, where we are probably in line in terms of what's happening globally in that space. So whether it is into biofuel, that's another area where technology, where how do you get sustainable fuel for future, and that's where I think government and the agencies are trying to move towards that, trying to provide some support. So any development or this thing in that space, okay, can be a interesting area to look at. So yeah, so I think these are some of the areas where I think some disruptive technologies can create some value.
Let me come back to His Excellency Hari. I'm not going to give you $100 because that would be blasphemy. So, can you tell us what your favorite picks would be from sectors and that you would put your money in?
I can talk to you a little bit about where Dubai is really focusing, which is regulation, infrastructure, and PPPs. And maybe just to bring this to life, a few projects that, I mean, originally they were projects, now they're real life initiatives that are happening. The first that we're very proud of in Dubai is the Mohammed bin Rashid Solar Park. This is the world's largest single-site solar park in the world. It is a $14 billion investment, so quite significant. By 2030, we estimate that it will contribute up to 30% of Dubai's power, and that'll be completely solar, clean. By 2050, we should be at 100% clean energy.
But why do you need that? I mean, your UAE is supposed to be oil-rich, so why are you investing in solar power?
The UAE has oil, but I think the intent of diversifying has always been in the mind of our leadership. Number one. Number two, you know, we made significant commitments to the global sustainability agenda in advance of and during COP28, which we hosted in Dubai. And so I think, you know, it was really important for us also to lead by example in that regard. So I see the decarbonization agenda, as one of my colleagues mentioned, as a very important one. The second is the world of drones. We have drone deliveries that will, again, by 2030, cover 1/3 of Dubai's area. We've piloted that with a focus on food and medicine as the key areas. 2030 is also an important date for autonomous transport for us. We will have 4,000 self-driving cars on the road by 2030. And we anticipate that 1/4 of all journeys will be using those autonomous transport. And we add to that the overlap between autonomous and drones, where we have flying taxis in Dubai that will launch as soon as 2026. And so the government is really going behind very practical, implementable, some would think future technologies, we think actually can be in the next 5, 6, 7 year forecast period. Maybe the final one that I'll mention, which also links to our sustainability agenda, we announced at COP28 Dubai Reef. This is the world's largest artificial reef that we are constructing. It's a 600-kilometer squared reef. We are using South Korean technology to put in place 20,000 modules that are purpose-built. And that project should complete in 2027. And the idea being that it really creates the flora and fauna to support, again, significant reef life in Dubai, which we think could also be used from a carbon credit perspective.
Fantastic. I think this has been a very engaging session, macro perspective, both from India and Dubai, also specific areas that, that people are excited about investing, many cutting edge areas in Dubai, and also how the synergy between India and Dubai would work, what the winners would be in public and private markets. So I'd like to really thank the panel here for sharing their insights and running such an engaging conversation. I wish you all the best, and I hope you all in the audience enjoyed it. Thank you.
Well, with that, may we request our entire panel to come together for a group photograph. Of course, these moments are going to stay back with us with the wisdom they've endowed on stage. Let's give them a bigger round of applause, ladies and gentlemen. And with that, allow me a moment to also invite on stage for the felicitation of all our panelists, may we request Raj Nair, co-chair of Pivot 2025, Chairman Avalon Consulting, Gateway to the Future, to please join us and help us with the felicitation. Let's give Mr. Nair a warmer round of applause as we welcome him on the stage and allow us an opportunity to give a token of appreciation to all our panelists. Of course, if I may first request Ashish Wadhwani to please step forward along with Mr. Nair in one frame. Mr. Ashish Wadhwani and Mr. Nair. Mr. Nair, if we can have you turn towards the camera just for the videography. Let's give them a big round of applause. Mr. Ashish Wadhwani and Mr. Raj Nair. May we now request Mr. Shekhar Bhandari to please, okay, we have His Excellency Hadi Badri in the frame. Let's give him a warm round of applause. Of course, we're right now felicitating all our eminent panelists on stage. We have Mr. Ashish Wadhwani, we have Shekhar Bhandari, we have His Excellency Hadi Badri, Mahesh Patil and Ranu Vora. May we urge all of you to come together in a photograph and allow us an opportunity to also now capture Mr. Raj Nair, who is the co-chair of Pivot 2025 in this frame with all our eminent delegates and our panelists on stage.